Hey folks, and welcome to the Pipnotic Symposium for the 8th of May 2020. Today we're going to run over some trades and some pair analysis using currency strength and supply and demand. And we're also going to have a look at the configuration of some of this software, just so that everyone has the opportunity to configure their software in the same way. And of course it's understood that we're all using different brokers, or many of us are, and the server times are going to be different. And when I say server times, I mean the market watch here. Currently here in Indonesia, it's quarter to 11 in the morning, and here it says quarter to 6 in the morning. So I'm using probably maybe GMT plus 3, I think, is my server time. And so it's just nice to know that yes, while my charts look like this, yours will probably look a little bit different. But if everyone wants to look at the same charts, the best thing you can do is to go to the hourly chart, because then everyone's looking at open and closes at the same time, because hours open and close as on the hour. Okay, and so this is just a nice way to ensure that we're all looking at the same stuff here. Okay, but what we do have is we do have the currency strength software, which is configured in a very specific way, and the default settings in the software are going to be fine, but I'm just going to show you what I'm using so that you can entertain the idea of using that. The default settings are 300. Okay, so mean period is set to 300, and the modifier is 2.618, and this is a pretty extreme reading, and I want to make sure that the people are going to get themselves into as little trouble as possible, and so that the default settings for the software are going to do just that. They're going to ensure that you're getting into the trades at the best possible price. But I like to kind of speed things up a little bit for myself, and so I put the mean periods to 500 and the modifier at 2.5, and this is what I'm using to view currency strength data, just because I like to see this information. Okay, so that's what I have there, and then you'll notice on the other side of my chart I have 1, 2, 3, 4 instances of the currency strength GFX. Okay, and this is the longer term here. Then we have the medium term, we have the shorter term, and then we have the session data here. So if we have a quick look at the settings, I have the look back setting for the mode. We have the look back set to 50, and we are looking at a static period, the static period being the weekly. So this is weekly strength information. So here I have a really good insight into what these currencies are doing longer term. Okay, so 50 weeks. Okay, this is 50-week currency strength data. This is very profound information. So this is showing us what the major flows are doing. And you'll notice that if any of you here pay attention to the commitment of traders data, that this data here is going to reflect very clearly what's going on in the flows of the commitment of the. Then down here we have the shorter term, or the medium term rather, and this is simply 50 period look back, and we are focusing on days. So here we can see 50 days. Okay, so we have a pretty nice insight into what's going on slightly shorter term, and you can see these areas very nicely on the chart. You can see that we reach this low here, which is just here, and we have the same low, which is just here. And so while this one reacts much faster, you can see this one happens a little bit slower. Okay, so you can see, well, faster. I mean, you can see that this happens. We form this low here, and you can see the detail of the development in the daily data just here. Okay, and then we have the shorter term, and this is the look back setting, and this is 4-hour period. So you can see, in a second we'll expand the data on this so we can see more of this, but this is showing us pretty bleeding edge information. So if we scroll all the way back here, look like this. We may have to zoom out a little bit more. A little bit more, so we can kind of cram everything in there. Okay, so here you can see the details, the dirty details. Here we have that low. We have the low on the medium term and the low on the shorter term, which is here. And so you can see, I mean, there's essentially telling us the same thing. Okay, we have the low here for the pound, we have the low here for the pound, and we have the low for the pound is going to be, on this time frame, is going to be further in the past here. Okay, so this is really interesting. And so you can see when price pokes down like that, wow, then we're probably going to see the Australian dollar move higher. When the pound comes down like that, it's going to move away. When the yen moves down like this, it's going to move away. Okay, but note that, okay, when this happens, when price comes down to an extreme level like this, or rather the strength of the yen comes down like this, I mean the process of liquidity being distributed, so moving into the Japanese yen at this price point, it's a very slow process. And as I mentioned in yesterday's symposium, I mean, you have to be very patient. So you can get into these trades based on 4-hour daily or weekly histogram readings, and you're going to have to sit tight. You want a big stop, you want to be patient, and you don't want to micromanage these trades because you just have to let them work. Okay, the market, if you have good stops, good size stops, and you're trading at extremes, I mean, something crazy will have to happen for price to move down and stop you out. Okay, if you have decent stops. Okay, stops are there to protect us, and they're not there to take us out of trades early. So you need a lot of air for these trades to work. So you know that when price comes down, the strength of the yen comes down to such a low level like this, you have to know that other people with a lot more money than us are thinking, wow, the yen is really cheap. Maybe it's time to move our funds into yen if we have to buy, for example, a Japanese company. So you're looking at European companies, and they're looking to acquire perhaps a Japanese company. I mean, they're paying attention to this. Okay, and so when they can see that the Japanese yen is so weak, their banks are telling them, okay, now is a good time to begin to acquire Japanese yen, because then you can get it for a pretty cheap price. So there's going to be enormous savings on the Japanese yen, and thus the Japanese company, when the transaction is made down here, in contrast to being made up here. Okay, and so you got to sit tight. You really have to sit tight, and this is a lot of weeks. If we look up here, this is probably, I don't know, maybe 5 or 6 months of time just here. Okay, at least. And so if you're getting in based on weekly currency strength information, I mean, you're going to have to be okay sitting on these positions for a long period of time. And then what happens? Well, then you have this massive bull run, and then it becomes the strongest. And when it's up here, then you have Japanese companies that are looking to buy British companies or English companies. Okay, and so they're doing business during this window of opportunity, because there's enormous sale. There's enormous sale on the British pounds at this price point here, and so you have to be willing to wait. And you know that when you get in here, you have to be patient. You have to be really patient. For those of us who are patient, then this trade works out. And then we get up here, and we're the second strongest currency. Okay, so patience. Okay, so this is all good. Then we can see the long term, medium term, and the short term. And this down here is just showing us what's going on over the course of the currently active session. So this is a really beautiful way to visualize data, and I love this. And so what you have to do is you have to set the mode to session open, and that's it. Click OK. Then you can see the development of the currency strengths relative to the open of the current session. So currently it's 7 minutes to 11 in the morning, and so my session, which is the Asian session, has been open for a few hours, and so the look back is going to be a few hours. Okay, so on the minute chart, and I always like to keep my currency strength window on the minute chart, because the new ticks are coming in every minute, and so this is updating. This is forcing the software to download historical data every minute, which is what I want. I want accurate data all the time. Okay, and so we have this just here, and this is giving me tremendous insight into what these currencies are doing. Good, so that's the currency strength dashboard, which I'll call it, which is on the right side. And I've been talking about the currency strength dashboard for over 5 years. If you guys go back to the really old material, I like to divide my charts where I have the currency strength dashboard, which is essentially the flows and the fundamentals priced into these currencies, priced into the data, and then I have my price chart over here on the left side. Okay, so that's what we have here. And so here for the histogram, we already ran through this. I like the 500 and the 2.5, and then I have the supply and demand software here. And so what I'm normally doing these days, due to the histogram, is I'm setting my alerts. And so I want to scan all currency strength, all symbols that this currency strength software is looking at, which is all of these. So we have a lot of symbols. And I just want to press OK, and I'll wait and see if an alarm is hit. Let's see if something happens. And it takes a bit of time because we're crunching serious numbers. Nothing happened. But what you can do, which is the beauty of this software, is that you can say, yes. Then you can go down to the small time. You go to the hourly. You go down to the hourly chart. And then the numbers, you see it's delayed. If I go like that, you can see that nothing's happening because it's crunching numbers. But now it's doing it on hourly data. So we'll wait a little bit more. See, there's nothing happening there. Okay, so let's go to the half an hour chart. See if anything's happening. And eventually we're going to get a hit. There's nothing there. Let's go to the 15-minute chart. There's nothing. Go to the 5-minute. Nothing. But here on the 5-minute on this chart, you can see we have a nice area of demand just here. Okay, let's do one last one before we go to the weekly. So the 1-minute chart. Okay, and here we have one hit. This is a Euro Danish Kroner. So that's not a pair I'd be very keen on looking at. But notice here on this particular chart, we're on the Australian dollar, American dollar. Let me minimize this a little bit. Okay, we were alerted here and here. We can start to see it. That we actually have divergence occurring. We have price going higher. We have the histogram moving lower. This is telling us that we are probably going to have a temporary, a shorter term pullback. And this is interesting to us because we are shorter term, we're very high. We have high readings here. For the session, we're very high. And so when price is doing this, we're probably going to have some kind of a pullback. And you can see here pretty clearly that price is beginning to break down. Again, this is short term. I rarely find myself on the 1-minute chart, but just to illustrate how this information can be used, you can see that we have the Australian dollar, American dollar continuing to move higher, but we can see that the strength of the Australian dollar relative to the American dollar is going down across the board, okay, relative to all other currencies. So that's telling us that this pair will probably have a bit of a retracement, okay? And so this is just an interesting way to view this. And you can see price is going to start to break down. Okay, let's have a look at the Euro Danish Kroner. I'm just going to disable this so we don't run it again. So the Euro Danish Kroner, which is just here. Let's have a look at this. It's on the 1-minute chart. Look at that. See, this is what I spoke about this yesterday as well. This is what a pegged currency looks like. So we have the euro and the Danish kroner that are pegged together nicely. But we do have a similar thing going on. I mean, I'd never in a million years trade this currency pair, but being married to a Danish woman, having lived in Denmark for 20 years, I pay attention to the Danish kroner. But you can see that we have currency strength divergence. We have a bloody ugly price chart, but just to show you what it looks like. Okay, so we have something going on here. It's telling us, well, we have some interesting shift of flows that's occurring at this price point. Be aware. Okay, so now before I do that, I'm going to go to the weekly chart. Now we're going to scan everything on the weekly chart. So I'll enable this once more and see what sets up here on the weekly. So now we're crunching numbers. This is weekly data. So let's see if we get any hits. Nothing. Good, so there's nothing to do for the time being. Okay, so we can turn that off. And we're done with it. Go back to here. And so that's pretty much how I'm using the software. And it's very effective, and it's a really nice way to identify the beginning of these gradual shift in cycles, because normally you'll have, let me plug in my pen, so you'll have price approaching these extreme readings where you'll have a very sharp sell-off and a very powerful sell-off. For example, if we use the Japanese yen example, so you have the Japanese yen that's that's moving. Let me add my tool. I got this cool drawing tool off Shopee, which is the Indonesian Amazon, and it's pretty cool. It enables me to draw by hand, which I really enjoy instead of using a mouse. So you have the strength of the yen. So we have a zero line. We can just say this is a zero line. So you have the strength of the yen kind of comes down, kind of moves down, then we're kind of entertaining these low yen prices, and then price slowly starts to pick up, then it goes up, and then it goes up, and then it goes down, and then it goes up, and then it goes down. Okay, it's not going down and staying down forever. It doesn't happen. It's absolutely positively impossible for the strength of the yen to go down and stay down forever. It won't happen. It cannot happen. And this is because data is constantly being fed into the market. People are constantly interacting with the market. They are accumulating positions to buy and to sell. People are buying companies. People are selling companies. Economic data releases are constantly being released into the market. And this is affecting the strength of every single currency that is currently being traded. And so this is going to cause volatility. So even though we have, let's say this is weekly strength data. If we change the color for this, go to the color, come on thing, let's go to yellow. So even though this is going down, on slightly smaller time frames, it's going to be doing this, which will look on a short-term histogram. Let's say this is a shorter term here. It's going to look like this. It's going to go down, then up, then down, and up, and down, and up. So this is going to be positive 2.5. This is going to be negative 2.5. So what we're doing is we're focusing on the overall direction of this currency, which is the Japanese yen, which is down. What does that mean? That means we're only selling. We're selling at variant positives. We're selling at variant positive. We're selling at variant positives. Okay, and so you're trading in line with the strength, which is the major flows, which is unbelievably powerful. Okay, and so when we're looking at currency strength and we're looking at buying and selling at extremes, maybe it's a good idea to do so when focusing on what's going on in these currency strength readings, because this is a very powerful piece of information that we're otherwise completely oblivious to if we're looking at a single currency pair. So if we look at, just for the sake of example, let's just look at, I said, a pound American dollar. So we're looking at this and we're trying to make trading decisions. Let's go on the 50-minute chart. I think a lot of people are like trading on short time frames. So we're looking at the 50-minute chart. We're thinking, cool, I think we're maybe gonna go up from this area here, or maybe we're gonna go down from this area here. We don't know for sure, but wouldn't it be nice to do something like this, where we go to the daily chart and we find a bias, and you can see, I mean, where is price probably going to go? Well, actually, price is pretty low, isn't it? If you look at this, you can see that we've reached these really low levels here. You know, we've kind of poked into those a couple of times here and here, and typically, when price has done that historically, price leaves. Okay, and so in such a situation, you have a directional bias. So you take this information with you to the smaller time frames. Let's go back to the 50-minute chart. And so knowing now what we just saw in the longer time frames, would you be comfortable selling here? Personally, I wouldn't, but I'd be more comfortable buying here, and I'd be even more comfortable buying here, because we know that we are trading in line with the flows, which are up. And so this will probably get consumed by the opposing order flows at some stage. Price can easily go up to the level, poke into it, have a bounce, again have a bounce, but eventually it'll do one of these and then it'll cut through, test, and then leave for the moon at some stage. We don't know when. Okay, and so it's really interesting and very important for us to pay attention to the flows, which we can see using the currency strength data which we have available to us. Cool. Okay, that was a bit of currency strength, but we've had some positions on over the past couple of days. So let's have a look at those. So we have we have these ones that we're still in. We got into a couple of trades. We had the American dollar, Canadian dollar, and we posted this trade yesterday, right when we were filled, and this is essentially where we marked off. And if we have a look at the chart that we looked at back then, it looks like this, where we had the Pipnotic a supply area. So we had the beginning of the sell zone, which was here. We got in at this area here. Our stop was above the highs here, and now we're slowly beginning to drift lower. Now we're challenging this area just here. Okay, so if we go back to the charts, it looks like this. So we posted this when we were up here, and now we're wriggling down at these lows here. And we have no risk in the trade, so we could easily get stopped out. So when you move stops to break even, that's a huge risk that we're looking to take. But because of the way price left, I don't think that we're going to come up here. And if we do come back up to here, then I don't want to be in the trade anymore, because then something would have happened. The sentiment would have changed since we got into the trade. So what I'm expecting, what I'd like to do is, I'd like for price to leave and take out these lows here and then continue lower. And you can see now that we've actually formed a continuation pattern. And if we go back to the theory that we like to discuss, you can see that we have a distribution candle. Okay, so this candle closed, this one opened, this candle closed below the low of this candle here, and now we're moving away. And so if we mark that one off, we have this here, and we have the beginning of the sell zone is just here, so we're probably going to have some reactions at this area here should price decide to come back. And this beginning of the sell zone lines up pretty nicely with this one here. If we look at this, so we had accumulation, this candle closed, the low of it is here. Price tested that area. Okay, so left, we tested it, we came back. So this beginning of the sell zone is pretty close to the backside of this area of demand. Okay, so we can expect maybe price that'll kind of wriggle up to this area here and then continue moving lower from this area here. Okay, but we don't know. We'll have to wait and see what happens. But we do have on this time frame, you can see if we zoom out a little bit, we do have a gap, and that gap would be closed at around this price point here. So price gapped up. This is induced by the fundamentals related to oil. Price gapped up on the American dollar. This is not necessarily because of American dollar strength, but it's more a result of Canadian dollar weakness. And so price kind of moved higher, and then we're just going to probably re-reference that before we figure out what is going to happen. But fundamentally, the oil wars are affecting the price of the Canadian dollar. But as people slowly begin to move back to the workplace, the workforce, they start driving their cars, we'll start consuming oil again, and so this will be good for the Canadian dollar, because then the reserves can go down, the price can go up, so demand for oil will go up, which will make the supply of oil go down and the price of oil go up. And so this is essentially maybe going to drive this currency pair lower, depending on how quickly we move back to our jobs. Okay, so this is what we currently have there on the Canadian dollar, American dollar. And then we have what do we have here? We have the Canadian dollar, Swiss francs. Let's have a look at that. I don't remember what. So this was a daily trade. Yeah, this was a daily trade taken here. Okay, so price kind of moved down, and then we're still very over. We're oversold. When I say oversold, that's kind of a stupid thing to say, because we're not oversold. But what we can see is that we have extreme currency strength divergence. Okay, and so the path of least resistance is for this pair to move higher, because it's difficult to sustain these moves, continued moves lower. So shorter to medium term, we're probably going to wriggle higher. Okay, and that's pretty much what's going on here. So you can see here that if we have a look, we got into the trade just here. Okay, price moved up, we moved down, we moved sideways, we started to accumulate. And when I saw this happening here, we clicked into the trade, and then price slowly started to drift higher. And now we've moved above these highs here. and so we have a bit of protection for our position. And we do have this little area here which is maybe going to give us a bit of challenge, so we could consider maybe getting out of the rest of this from around here, but we'll have to wait and see. I would rather wait for price to figure out what it's going to do. Maybe have a poke up into here, a move lower, and then re-challenge this area of supply and then push higher from here. But we don't know what's going to happen just yet. But we do have the flows. The thin side of the market is to the upside. We do have this really nice area of supply just here. Okay, so we do have a beginning of a sell zone just up here around this area here, which actually lines up nicely with the highs of this, which is just below here. So this would be probably a price sensitive point. Alternatively, we have kind of fresh daily supply for this pair just up here. So we'll have to wait and see. I don't know what's going to happen. I'll focus on price today, keep my eye on it, and see what happens. That's what we have currently for that pair. And we have the Euro Yen, which is still working. This was a 4-hour currency strength histogram trade where price poked into this area here. We got in a little bit early based on the currency strength, but if we look at where we could have gotten in, you can see, let me zoom out a little. So we have this. Okay, this is actually a pretty decent area where we had this area, price left. So we had this area that was formed. The reason that this is an interesting area is because we had this area here, and you can see that price tested it and it was rejected. We tested it again and it was rejected. So when price moves through it, that's telling us that this price level here is very important. Okay, price went up, we moved above all of these highs, we flushed out all of this here, all of this supply. Okay, we had the sell zone, price moved through it, didn't really care much about it, and then you identify kind of the turning point, the origin of the move that moved through it, and the origin of the move that moved through it is down here. Okay, so we have something down here. Okay, and then an analysis on a smaller time frame will show us pretty much where the slingshot was pulled back to, but the major slingshot was essentially here. So this is where the entry went, just here. Price poked into it and then we left. So you look where we are now, price actually went a little bit deeper than that. So we went a little bit deeper, so we had to stomach a bit of a drawdown there, which is fine, which is normal, and now price is slowly starting to work for us. We go back here, and you can see here that the price is slowly starting to wriggle. So the question is, well, where are we going to go? Well, we have no idea. We have no idea. But what we have prices being pushed lower. We have currency strength. Actually, we do have more significant pushes. We have this doing that. And so you can see that if you look again at the commitment of the traders data, and thanks to Kevin for posting those really beautiful charts in the Discord, you can see that the shift in the accumulation of positions, institutional versus consumer, is a very, very slow process. And so you can see here that we've had some pushes lower, another push low, another push lower, and a really strong push low. This could be like a stop hunt of some kind, releasing some liquidity into the market that can then be bought up by the institutional traders, which may or may not cause price to wriggle higher, shorter to intermediate term. Okay, but that's what we have for the time being on that one there. And then we have the Swiss franc Japanese yen. This is still pretty early on. I can see we haven't really done anything here just yet, but if we have a look at the bigger picture, go to the weekly chart, price is kind of poking into these lows. We had this area of demand. Okay, we had the beginning of the buy zone, which was here. You can see the test. Then we had the new beginning of the buy zone, which was here, just here, which is where the entry was. Price poked into it. We went a little bit deeper, and now we put our hand on the hot stove, and then we've pulled it off. So you can see here, price is rejecting. Excuse me. Go to the daily chart, and you can see that we have a similar thing happen that we saw on the Euro Japanese Yen. This is again because we have this is a Japanese Yen cross, and so now we're slowly starting to drift higher. We don't know how long this is going to be sustainable, but we do have reason to believe that that this pair will drift a little bit higher. Okay, and if we have a look at the currency strength histogram once again, we have divergence occurring here and here at the beginning of a weekly buy zone, at daily demand. And if you look here, the Pipnotic software drew this area for us beautifully. Let me zoom out a little one more time, and you can see this is where it was. So you had this area of demand that was formed, price gushed above these highs, tested, rejected, accumulation. We closed above these highs, price moved sideways, a slingshot was pulled back, and then we left. We came close to this area here. The beginning of the buy zone was here. Price poked into that, and this is where we're seeing a bit of a bounce. Okay, and so we're constantly, when you're looking at currency strength and buy zones and sell zones, your focus is moved away from price. It's moved away from histograms and oscillators and all sorts of other stuff that is uninteresting, and stuff that focuses on exclusively one currency pair, because that's not really telling us what's going on across the board. And you're focusing on the distribution of liquidity and the patterns that this leaves in a marketplace. And this stuff is fascinating, and this is where the clever decisions are made. Okay, so you can see, you can see this. We have a huge rejection, So what does that tell us? Well, that tells us, oh bloody hell, we have a sensitive price point just here. And why do we? Well, this is the beginning of the buy zone that we saw historically on the daily chart. You remember that slingshot was pulled back and then the big release. This is exactly where that happened. So price moves lower. We sit on that area. You can see we have a sideways movement. We have a parent. We have a child. The child gushed through this. We consumed everything down here. We look for a new pancake. We found it, and now price is moving higher. Okay, fascinating. I love this stuff. I could talk about this stuff all day long. I hope you guys enjoy this as much as I do. It's a very exciting way to view price, I think. Good. So that's what we have for the time being. So these trades are working. So we'll have to wait and see how these work out. But the things are going really, really well. Okay. Okay, let's have a look at some potential others. And let's focus on the currency strength stuff here. So let's have a look at the yen. Look, the yen is very strong. It's very, very strong. What else do we have that is weak? Okay, so we need to pair the yen with something else. What do we have that's weak and getting stronger? We have the Kiwi and we have the Australian dollar. So let's have a look at the Aussie Yen. Aussie Yen. Let's look at this pair. This should be wriggling north for us, and you can see it is. So let's have a look on the broader picture. Let's have a look on the weekly chart. We want to see the major flows. You notice, the histogram would have got us into this trade at the absolute low of this spike. We would have been pulled in as soon as the histogram moved below this green line. We had rejection. We had accumulation of long positions. Price closed above the area of accumulation. Now we're moving sideways. Now we're challenging this weekly supply. Okay, and so now price is kind of having a push at this. Is this going to hold? Well, we don't know. Historically, experience tells us that buying into supply is a really bad idea, especially on the weekly chart. So we'll have to watch and see what happens. But we want to focus on the smaller time frames, because intraday there are going to be some setups that might be interesting to us. Okay, so you're looking at this. First of all, we need to see what price is doing, and you can see that we've had price already feed into these areas. This daily with nested 4-hour supply. Price poked into it. Then it left, and these boxes were drawn on the chart when this candle here, actually 1, 2, when this white candle here closed. When this candle here closed, these were drawn on the chart. So we were told already the 9th of March that we should be selling at this area here. So you have plenty of time to plan this trade. Price comes back to it, and now we're already up at about 3 or 4 to 1. Okay, where do you get out of the trade? At opposing demand. Where do we have opposing demand? Well, we had it right there. Price left, slingshot was pulled back, we went high, we moved above these highs from this low. This is where price came to. This is where price reacted. And so now we're having another push higher. Okay, so I think shorter term longs I mean very short term longs could be interesting. Keep in mind that we are at weekly demand, and so you want to be managing these trades pretty aggressively until that area of weekly supply is gone. We do have this, we have this, and so we have the shift is occurring or has occurred. We have the area of 4-hour demand. Okay, we have the area, price shoots up. This area, this box here was drawn 1, 2, 3 when this candle here closed. When that candle closed, this box was drawn. We could have taken the trade on this test or this test. If you missed it, you take it on this test. Okay, price came to that area and price flew away. Okay, let's say you had 2 times risk reward on that trade. Let's see, let's say 20 pip stop to stay out of trouble. How far has price gone? It's gone 180. Okay, so a 9-to-1 on that trade, providing you would have got out now. So obviously that's not going to happen ever, only in lucky situations, but just goes to show you that that these areas are very powerful, and so you should definitely be paying attention to them combined with currency strength. Okay, we'll do one more because this is getting a little bit long, and that's the Kiwi Japanese Yen. It's going to look very similar. If we go to the weekly, we can see the shift here. So we had a really strong push lower, and now we're doing kind of the same thing. Price is wriggling high. We're slowly gnawing away at that weekly supply. Let's go to the daily chart and see what happens there. Yeah, so we had this area of demand that was formed. Okay, price has tested it once, twice, 1, 2, 3, 4, 5, 6-ish times, and now we're leaving. And notice as well in this one that if we use our pancake analogy, so we have our plate. This is our plate of pancakes here. When I say pancakes, I mean pools of liquidity. And so we have the pancake at the bottom. That's the liquidity available at the bottom area of the zone. We have this one here. We have this one here. We have this one here. Okay, and so what happens then is when we have someone who's looking for a pancake come and take the top pancake disappears. So if the next hungry buyer wants to buy a pancake / wants to have their orders filled at this area, they'll have to go to the next one. And each time that happens, the pancake will be removed. And when that happens, the fork / price has to move deeper into the plate of pancakes / a pool of liquidity. I hope that makes sense. But you can see that we do have price going deeper and deeper and deeper. First we went here, then we went here, and this time we went here. So we went deeper and deeper and deeper. You can see how these go progressively deeper into this pool of liquidity in order to find those big limit orders that are looking to hold price higher. And notice that this is happening during a time where we have the strength of the Kiwi picking up relative to the Japanese yen. And this is as a result of increasing Kiwi strength and unchanged Japanese yen strength. And so this is happening because of an increasing flows moving into the Kiwi and not decreasing flows moving into the Japanese yen. Okay, so this is very interesting. So we'll see what happens. We do have this area here, which is interesting, but we'll see. I'm not sure exactly what's going to happen, but shorter term, I think we could entertain the idea of buying until we get up into this box here. But just be careful, because this is some serious pancakes up at this area here. So just be careful. Okay, good. Well, I'm going to leave it at that. That was a bit of a long video. I don't like to make them long, but sometimes there's just so much to cover. So I'll leave it at that. But if you have any questions, please post them in the video comments below or chuck them in the Discord channel. And thanks for watching.